Investing giants like Warren Buffett, David Tepper, and Bill Ackman all filing 13F reports for the second quarter, which gives the rest of the world and all of us a look inside their portfolios. Contessa Brewer is here at the table to tell us what was in those portfolios this quarter.
This was my first time doing the whole 13F things, and wow, what a view you get by really diving in. Let's start with the obligatory reminder. These figures are only current as of June 30th, so additional moves may have been made since then that we just don't know about. Berkshire Hathaway, the big one. Warren Buffett's firm disclosed the size of its Apple stake. At the end of the second quarter, it was 400 million shares. Recently, Berkshire announced it had decreased its Apple holdings by 49%, and now it appears that happened during the quarter. Buffett's firm also increased its holdings in global insurance giant Chubb to 27 million shares, and remember that was revealed as its mystery stock back in May. Other noteworthy moves: Berkshire decreased its stake in Capital One, T-Mobile, and it dissolved its stake in Snowflake, the AI cloud computing company. Cosmetic maker Ulta stock got a boost after a small new position from Ulta. There you can see the move. And Pershing Square made some moves in the consumer discretionary space as well. Bill Ackman's fund revealed a new stake in Nike. It bought 3 million shares in the quarter, but disclosed small decreases in Chipotle and restaurant brands. Big tech in play. David Tepper's Appaloosa selling Alphabet, Amazon, Meta, and Microsoft. Dan Loeb's Third Point also selling Alphabet and Meta. And in the semi space, you have Appaloosa decreasing its exposure to the chips NVIDIA, AMD, Micron, Qualcomm, Taiwan Semi, and Lam Research. Meanwhile, Viking Global took a new stake in NVIDIA and dissolved its stake in Advanced Micro Devices. Third Point taking new stakes in ASML and Micron and increased its stake in Taiwan Semi. And then, Carl Icahn bought 2.6 million shares of Caesars. We knew he took a stake, but we didn't really know how much. I just wanted to throw that in there because how can I come on with you and not do some coverage of casinos?
Casinos or Carl.
And this goes back to what we were saying about July 10th when tech stocks topped out, and now we're learning some of the biggest players trim their holdings. But how about
ahead of that? Yeah,
ahead of that. But how about Ulta? This is what I was cackling last night reading this.
You were cackling?
Cackling because we were just talking about this on Monday. Remember, and Mike was saying maybe, and Sephora. We were talking to Oliver Chen.
Yes.
And he said Sephora was picking. So they're looking at Ulta. Is it really 12 times?
And
now roughly?
Like 12, 13 times.
That's amazing.
So it got cheap. Ulta got cheap, kind of got into their zone. You always have to, I have to confess, I'm usually like, 13Fs. It's kind of noisy. This is not really, dismissible. It's more interesting.
These are more interesting.
Opportunistic stuff, right? I mean, Ulta is a broken growth stock. It gets cheap. Small position for Berkshire. But then also the Nike one is fascinating. Mm-hmm. It's a concentrated portfolio.
And especially when you're looking at so much reporting of consumer pullback and to see this diving into, which I guess, Ulta, the other play on this is if you think consumers are pulling back, what are the conventional wisdom that they're always still going to spend on cosmetics and, lipstick.
Yeah. The lipstick
shoes,
indicator, making rounds.
Exactly.
But what's the Nike thing, too, though, so that's the position Pershing Square took as of June 30th. The last trading day of June, the stock crashed 20% because they had earnings. Right. So you see that vertical line lower?
Yeah, so he bought in right before is what you're trying to say.
Or after. He could have bought it that day on the break.
Right.
And that's the fascinating thing you don't know.
I want to bring in Stephanie Link. Do not go anywhere. Chief Investment Officer, Strategist, and Portfolio Manager, Hightower Advisors, as well as CNBC contributor. What was the big surprise on that list for you? And are you going to follow anybody, if you will? Are you going to follow anybody into these stocks?
I think Ulta. Ulta is, I can't believe how cheap Ulta has gotten. And this is a company that's growing revenues in the 20% range and earnings also in the 25%. And it's just had a bit of a stumble. And I think the fact that the stock is down about 30% in the past year, I think that's really super interesting to me. I've never been able to own Ulta because it's always been so expensive, but it has really derated. And so I think that's sort of interesting.
What about Nike?
So I think Nike is a bet on what just happened to Starbucks because the management really has disappointed and the innovation has been lacking. So to me, it's like okay, you can own Nike if you think, A, they're going to be able to innovate, right? And I think they will, but there's so much competition, Andrew, at this point. From Hoka, from On, Semi. So they really do have to innovate. But I think that's a play on, there's going to be a management change. And if there is a management change, obviously the stock certainly could re-rate. But I think the current management has a lot to prove. And it's expensive, by the way.
You think that there's a management change coming at Nike?
I think for the stock to work, you do need management, some sort of change to happen.
But is there any, do you think that's happening? Do you think activists are showing up? What do you think is going to happen that's going to create this moment?
The stock has been a disappointment for a couple of years. And as I said, the stock is actually quite expensive, and the numbers have been coming down, and they're losing market share. So something has to happen. Now, I do think you had Mary Dillon on at Foot Locker a couple of weeks ago, maybe a couple months ago, and she was super excited about the innovation, right? So maybe there's more innovation coming, but at the same time, you have all kinds of competition, kind of hitting them at all different angles at this point in time. So I don't know. We'll see about a management change. I don't know, but I think for the stock to really work, you're going to need to have some change and some sense of urgency. And I just don't think you have it there right now.
What do you think about Warren Buffett buying more Chubb? Would you buy Chubb?
I think the insurance companies, they continue to have pricing power. You're seeing it across the board. You saw it in the CPI number yesterday, right? So Chubb is awfully cheap. Chubb is awfully cheap, but Allstate is cheap and Progressive is cheap. They're all cheap and they have pricing power. So I think you can pick one or two names. Certainly.
And the thing about Chubb, if I can just jump in, is that, and we just heard this on the earnings call, Evan Greenberg says if consumers and their customers are looking for the cheapest insurance, it's not Chubb.
Definitely.
He said we're the luxury brand of insurance. And so speaking of pricing power, Chubb really has it because they just say, if you can afford us, we're the best and you should go with it.